Hello and welcome to another trading day right here in Lagos, Nigeria. And on Business Incorporated, we bring you all the stories right here for the next 55 minutes. Coming up. United Kingdom and Nigeria signed trade deal to ease barriers to flow of goods and services. CBN intervenes in Nigeria's FX market with about $41 million inflow to about 5 commercial banks. Plus, Kenya's Eurobond issue attracts more than $5 billion in orders. Great to have you join us. Let's get to the top stories that set your agenda now. Starting with the energy market, we see the International Energy Agency has forecast markets will remain comfortable this year as new supplies satisfy demand and keep prices in check. Our report shows that world consumption will increase by 1.2 million to 1.3 million barrels per day in 2024, which is a significantly weaker pace than last year as economic growth slows in China and elsewhere. Meanwhile, this will be easily matched by swelling production from the Americas. That's predominantly the US, Canada, Brazil, and Guyana. And to other stories now, see the IMF right there giving instructions at this time saying the federal government has to fully eliminate subsidies for fuel and electricity, highlighting that these financial supports are not only expensive, but also ineffective in benefiting the populations most in need of assistance. The IMF believes some of the reforms of the government have been a huge step in the right direction. However, it wants the government to go further by taking off subsidies completely to complement reforms of the monetary policy. And that's the recommendation from the IMF. We got all of those information from yesterday and even into today. To the global oil market now, oil prices rose slightly today on fears Middle East tensions could disrupt supply, but uncertainty about the pace of potential U.S. Interest rate cuts and ensuing impact on fuel demand. That capped some of the gains we saw there. We see for Brent, that's up 0.1%. They're adding $82 to $82.07 a barrel, while WTI crude, still the cheaper alternative there, $77.02 a barrel. Oil prices were near flat yesterday after gaining 6% last week. And the Federal Competition and Consumer Protection Commission has commended the Nigeria Electricity Regulatory Commission for the sanction it slammed on 11 electricity distribution companies, as the DISCOs, for non-compliance with the capping of estimated bills for unmetered customers. According to the acting executive vice chairman and CEO of the FCCPC, Dr. Adamu Abdullahi, the commission stands in solidarity with NERC in its commitment to safeguard unmetered customers from arbitrary billing by DISCOs. Dr. Abdullahi adds that the capping regulation is a significant step towards ensuring fairer treatment for those without meters, and the FCCPC fully supports its enforcement. And back here, the United Kingdom has signed an enhanced trade and investment partnership with Nigeria. The partnership agreement signed jointly by Nigeria's Minister of Industry, Trade and Investment, Ms. Doris Zoka-Anite, and the UK Secretary of State, Department of Business and Trade, Olukemi Badnoch, at the Bank of Industry building in Abuja. It covers 14 areas aimed at improving on a £7 billion trade relationship between both countries and ensuring 99% of existing Nigerian exports to the UK are duty-free, among other benefits. Before heading to Abuja for the signing, the UK Minister for Business and Trade visited the first British independent school in West Africa, Charterhouse School, building on the UK government's commitment to support Nigeria's desire to offer high-quality education at home. And lack of support for small-scale farmers, insecurity, poor funding, and poor linkages from farm to market have been identified as a growing gap limiting access to food for Africans. The African Union Chairman on Food Systems, Mr. Ibrahim Maiki highlighted the challenges at a forum on food security at the State House. Mr. Maiki is seeking more commitment from government at all levels to change the narrative. Our correspondent Sarah Chimogu reports.
How to implement policies that will accelerate food availability and affordability within the African continent is the crux of this meeting, as convened by the African Union Development Agency, the new partnership for Africa's development. The event is coming after some protests over the high cost of living in the country. However, speakers at this forum highlight what should form the interest of government to boost agriculture and reduce hunger.
Together, we need to ensure that food is available and affordable for all by supporting the smallholder farmers, project through large-scale investment on forest landscape and ecosystem restoration, as well as the provision of farm inputs.
Africa is estimated to have a food import bill of $50 million annually, with 250 million of its population experiencing hunger. Experts believe smallholder farmers hold the key to addressing the gap. However, these farmers have their challenges.
Our first revolution calls for a fundamental change in our approach to food consumption. It emphasizes championing sustainable diets that prioritize nutrition while minimizing food waste.
The present administration has set an ambitious target of lifting 150 million Nigerians out of poverty. The plan is to assist farmers with the tools and funds to produce more food. The governor of Nasarawa State also explains efforts by his administration to empower farmers in his state.
Under our administration, we have not only introduced new policies, but we have bolstered existing institutional framework to attract major investors, such as Olam Rice, Nigeria, where they have their 120,000 metric tons capacity mill, and they are doubling it this year.
This two-day conference is expected to develop actionable plans that will accelerate food production across the continent.
And now to our first conversation. According to reports, Shell Nigeria has started a supply of crude oil to Nigeria's Port Harcourt Refinery ahead of commencement of refining operations later this quarter. In December, the NNPCL announced the completion of turnaround maintenance and mechanical testing of phase 1 of the Port Harcourt refinery. The repair works cost around $1.5 billion and were scheduled in phases. Well, joining us now to analyze all of this is Mr. Jide Pratt, COO, Iona Nigeria, and country pilot manager at Trade Grid, joining me right here in the studio. Great to have you.
Nice talking to you.
Yeah, so I guess, the supplies just keep coming, at this point to the refineries. We've seen Dangote Refinery, we've gotten some supply. Now the Port Harcourt Refinery is getting theirs. How are you seeing this?
For me, brilliant. That's the first thing I would say. And why do I say brilliant? This has moved us from a nation that had zero refining capacity to a nation that is moving towards self-sufficiency in terms of refining. I never thought the NNPC would pull it off, so this is a massive win for the NNPC, maybe in terms of credibility as well. And I guess what we all need to find out now is that how consistent is this going to be on a long-term basis? But putting it mildly, brilliant, good step in the right direction. Yeah,
definitely a good step. And this is coming at a time where the Dangote Refinery, they're having to import WTI, from the US. And we have good grades, here of oil. If we put up the different grades we have there, we have the Nembe grade. We have, grades that are sweet, and that can give you good product. If we bring out that list, the Bonny Light is there, Agbami, Kwaibo, and Brass River. But now they're having to go for WTI. Is this because of supply issues? coming from Nigeria?
So, I mean, it goes without saying, Nigeria hasn't hit her best numbers in terms of refining for quite a while. So, not refining, sorry, in terms of production.
Right.
Now, we're probably at about 1.3 million barrels a day now. Nowhere near the 2 million we should be at. So what it does mean is that the NNPC is struggling to give every refinery what they need to refine. A refinery is set up for principally one reason, and that is just to refine crude oil into distillate. It's not in doubt, and it's never been in doubt, that Nigeria has one of the best crude assets. But I mean, the point is that we cannot guarantee 2 million. So what it is that any refinery that needs to refine petroleum product will have to go and import it. They've gone for WTI because, I mean, clearly, top of my mind, they would rather have gone for Bonny Light. But if it's not available, what you're going to do is that you're going to go for the next best thing you can get. But what you do not want is your refinery to shut down. And I believe the same scenario happens with the modular refineries. They've struggled with getting supply for a while. This for me also sets a template. I mean, if the Dangote refinery can do it, then maybe the modular refineries need to try and partner and bring in cargoes on their own as well, as long as supply.
But does it make economic sense, you know, at this time, knowing that this would involve transport? You have to transport this oil, WTI, from the US. That's going to add. So how does it, you know, wouldn't that eat up on, you know, the profits that they would have made?
So it's two things. Freight is something that ideally, if we looked at the dynamics of refining locally, freight reduction or freight efficiency is a positive. In this case, if he has to go abroad to bring in, if that refining goes abroad, then that freight cost will be added. However, let's not look at the fact that Nigeria is the only market for a refinery. Sub-Saharan Africa has a need. So what it does mean is that he's going to sell commercially based on his P&L. If he brings in a certain amount and lands at X, it's going to be X plus refining profit plus his margins. And then he will sell it in whatever denominations he needs to sell. But I mean, Sub-Saharan Africa is a market that needs to be fed. So I think bringing in is not a problem. He will look for where he can sell it as a refinery, and I'm sure they'll do that.
Or is he buying this, is he buying WTI because it's the cheaper one?
Maybe.
Compared to Brent, and last I heard, you know, some of our grades actually sold at up to $80.
That's correct.
You know, per barrel, even though Brent wasn't even as expensive.
So it's, leave the cost of it. Every crude has what you call an assay. So it has its inherent properties. So if I want to blend more of black products, let's assume I want to bet bitumen, fuel oil, I'll go for heavy crude. So his choice to go for WTI must be based on the fact that if we put in X amount of WTI, these are the derivatives that we aim to want to bring out. So what it is that he's going for the best crude he can find for efficiency purposes. That's what I would say.
Right, and you know, at this point, that means with all the vagaries we see in the oil market, you know, all the fluctuations that's with prices, you know, we keep hearing that refining does not guarantee, you know, cheaper prices. That's for PMS, you know, and all the other products. So what kind of price do we have to see in the oil market to actually, even when all the, you know, refineries come on stream, to actually buy PMS cheaper?
Top of my head, I would say that you need crude oil to be about around $60 a barrel. Crude oil is not what we use directly, but what you find out is that you have gasoline prices, Eurobob and everything. So they need to come down to 600 levels. That's one aspect of it. But the point is this: if it comes down to 600 levels and the exchange rate keeps on inching towards 1,500, then likely I'm not so sure we're going to see anything. So it means the government needs to tackle not just fiscal, but fiscal and monetary policy. FDIs have to increase. There's a lot of pressure on greenback, and in my opinion, I think the 36 state governors need to sit down and how much of this naira are they changing into effect? The House of Assemblies, the legislative arms, all these need to fuse so that we have lower exchange rates and then lower crude oil prices to be able to see lower petroleum prices in Nigeria.
And talking about the FX market, you know, Dangote having to import, you know, WTI this time, that's going to put even more pressure on the FX market?
Without a doubt, but it's a simple solution, Ladi. If he gets it from the NNPC, does he need to import? And the answer is no. But if he doesn't get it, then maybe he stands, let me say, there's a bigger problem to face, shutting down that size of a refinery and having to restart it based on supplies that are a bit dodgy.
So at this point, it's not just, could it be that he's doing this because he's going to get it cheaper? That's talking about WTI. Mm-hmm. What if there's good supply, of our grades of oil, but because they're expensive, he would rather go for WTI because it's cheaper?
I think there's a balancing we need to look at here. He can take as many blends as he wants. Cost is one thing. But don't forget that when he blends, he's going to blend into different grades. So you've got gasoline, you've got gas oil, you've got LPG, you've got fuel oil. So he would balance, whoever is trading for the Dangote team would balance their books. How much does Nigeria need? So if I need to take a hit in terms of cost here, maybe I can make a gain if I'm sending it somewhere else. People from other countries are also going to send crude here because they do not have refining capacity. So it means that if Angola decides that, look, I don't have enough refining capacity and I want to build, I want to sell more distillate, then Nigeria becomes a very good place to go to, even though South Africa is actually closer. So let's get it right. Different crudes, different grades, but I'm trying to get as much distillates as I can get. If I can get more profits, quote and unquote, selling within sub-Saharan Africa, then what it means is that I can, for want of a better word, pad whatever losses by buying expensive crude. I can pad that for local benefit, more or less.
All right, let's just imagine all the refineries, come on stream. We have the Boa refinery, that's about 200,000 barrels per day. Let's imagine they all come on stream, at some point. Can Nigeria supply all these refineries oil?
I mean, my quick, direct answer is no. Ladi, we have to build from 1.3 to get to 2 million. While we're doing that, don't forget that NNPC is taking some leverage off crude oil by doing forward sales. So what it means is that in the PSCs that they have, some of that crude has been pledged to making payments. I think the Afrexim deal, if you remember, there was an Afrexim deal of about 3 billion, I can't remember top of my head. Some of that crude is going to pay back future debt. So two things must happen. First and foremost, we must curb whatever theft in terms of crude oil. We must begin to produce more. So maybe when we get to the levels of 2 million, 2.2, at that point, it's easy to say that Nigeria can actually supply whatever crude is needed for all the refineries. But as we speak today, in my opinion, no.
Because the problem before now was we could not refine.
Correct.
We were not refining, this product.
Yeah.
But now refining is coming on. Hope there's not a risk of not getting enough oil.
The risk is there. It's how we mitigate against those risks. Because this is what we're saying. If we're already pledging some of this crude oil today for future loans, then what it means is that we've leveraged that crude oil that should come out from the ground. So the people running the oil and gas sector for the country need to sit down and say, how do we get to 1.8? When? How do we get to 2.2? When? Of this 2.2, do we want to domesticate some? If the answer is yes, what portion do we need to feed the refineries? In my opinion, that straight line assessment needs to be done now, so that we're hearing from when it will happen. Ladi, it has to happen. There's no two ways about it. If you're losing 400 to 450,000 barrels to theft, we can't build on that.
Because so I just hope we're not solving one problem and creating another.
That's why we're alive.
A problem that wasn't even there before.
No. We've never had refining capacity. So that was why the DSDP started. So we take out the crude and bring in.
Because I'm saying we never had oil production, issues before.
We did. If you remember during the
that's why we're an oil-producing nation.
Yes.
So we cannot be acting like an oil-purchasing nation, because that's where it looks like we're tending to at this point.
So maybe put it in perspective. During the Yaradua era, that was when the Niger Delta, there was some kind of oil theft and everything. So they set up an amnesty program. So yes, we've always had crude, but we've never had optimal capacity. It was based on that we said, okay, bring in some of these people, let them guard some of the pipeline. So pipeline theft has always been there. maybe it's right to say it's never been to the levels that we see now where so much is being stolen. So we've had crude, we have always had crude. Refining we didn't have. So back to your first question, it's a positive, it's brilliant that we can now refine.
Now we need to sort production.
Now we need to sort production. So that domestication can happen, and at the same time,
quite incredible.
Refineries don't.
Well, what are you seeing, going forward now, for refining, in Nigeria and the oil market at this time? We're seeing a lot of distortions at this time. Yesterday, oil prices were down, but today we're seeing it up after a big close for the week last week. What are you seeing?
There's some exigent factors we can't deal with. We can only predict and hope. The discussions on Gaza Strip and no Gaza Strip, that fell through the cracks. It spiked oil prices again because everybody thought there was going to be an agreement to cease fire. That hasn't happened. Locally, what can we do? We need to ramp up production. Like it goes without saying. If we ramp up productions, keep on giving the refineries that we can. Sadly, we have to import some of those. But it now means that what yields are we getting locally? So if I'm a local refinery and I import crude, what's the optimum yield I can get selling gas oil across to a neighboring state, selling PMS across to a neighboring state? Because we often forget that in terms of drafts, large vessels coming in, we have an advantage in Nigeria. Most of these smaller countries don't. So I get in a bigger vessel, break it into smaller units, and sell so that I can balance those books. But what you'd also find out, in my opinion, is that a lot of the modular refineries will also start to try importation as an option if they cannot get supply.
Right, and it's quite interesting that, the U.S. actually like our grade of oil and they buy from us. So now we're seeing our refineries actually look to the U.S. Quite an interesting dynamic, I must say. Thank you so much for coming on. Jide Pratt, COO, Iona Nigeria, and Country Pilot Manager for Trade Grid.
Thanks for talking to me, Ladi. Thank you.
All right, we'll take a break now. When we come back, we head straight to the markets. Do stay with us. This is Business Incorporated. Welcome back. Well, from those POS rates you saw before now, we're getting reports that those prices are coming down, gradually. So we're seeing, some of these POS operators, starting to, bring the prices down. But we know that some of the ATMs are still not, dispensing cash, at this time. But you can always tell us your experience out there with the POS operators and with the ATMs. All right, let's head straight to the markets now. We have Ini again with the details on what's happening with these markets, and we're seeing the NGX marginally down at intraday. Not so bad.
Not so bad.
100K
down
looking
anyways,
shaky.
0.06.
Yeah.
Well, not so bad, of course, but it's in the red, and we hope for a recovery before the close of
the definitely at this point, because 100K is looking shaky.
No, 100K, it's okay because you have 980.
Yeah.
But
But in one move, that could be wiped out. But let's see.
All right, good afternoon, everyone. Welcome to the market segment of Business Incorporated. And of course, we're starting with the NGX, where we see a drop in the all share from the 102,000, above 102,000 that we closed with yesterday. Monday, we see it down to 101,000, even though it's still looking strong at 102. But any little move and then we're far away from 101,000. Yesterday, the market gained more than 100 billion naira, a good move right there, but we need to solidify on it, or else we'll have our investors running back to the fixed income market. The South Africa JSE is, however, in the green at intraday 0.12% at 73,809.63. That's obviously for intraday. We go to the Egypt EJX, and it's also positive, very solid right there. Well, solid 0.54% at 28,649.77. Kenya, we always have the previous day closed at positive 0.14%, but
lower than that 100 index points, which has been like a settlement point for them for some time. Before we go to other numbers, let's stay with the Nigerian market. This morning, we talked about Access Co. We know that yesterday it was negative, but early this morning, when we had that conversation during business morning, the trader that spoke to us said there's a bit of recovery. Now, let's find out what's driving that red that we saw with the NGX, with Afolabi Benro. He's an equity trader with Stanbic IBTC. Hi, Mr. Benro. Good afternoon.
Good afternoon, Nini. Thank you for having me.
Yeah, good to have you. So, what's responsible for the red we see? It's marginal, but if we are not careful, we could lose our 101,000. Well, who are those who are experiencing profit taking at this time?
So, it's mostly local investors. I think one of the major drivers of this has been we saw from last week the increase in the participation in the T-bill market, where the 1 year closed at 19%. So this has caused equity investors to basically start looking more towards the T-bill space in terms of investments. So profit taking is likely still coming from local investors. We're seeing more names come off during trading today. The banking sector is being hit. Some other sectors are also being hit as well. So we expect to probably continue to see this towards to the end of the session today.
Okay, but could you tell us the stocks that are being looked at? Because we saw a recovery yesterday, so we're hoping it to be sustained. But can we look at some of the stocks at this time? And we're particularly interested in the Access Co, of course, with the stories around it, what has happened, the unfortunate incident, and then we have a new acting CEO now. We saw a bit of recovery this morning. What's going on around those?
So currently, Access Holdings is currently down about 0.65%. Still very marginal, and volumes traded there is just about 4 million shares that has traded so far. So it's a very quiet day. If you look at the average that Access Co usually trades, on a normal day, we'll be looking towards maybe about 20 million shares thereabouts on a good day for Access Co. So it's still very quiet, and I think this is largely in line with the rest of the market. Volumes are generally low across the banking sector. So the likes of GTCO, just about 6 million shares have traded. UBA, just about 40 million shares have traded. So it's a very, very quiet session so far today, not necessarily isolated to just Access Co.
So I thought that the drop in yields in the fixed income space would bring investors back to the NGX, but it looks like it might take a little bit of time before we start seeing that.
Yeah, and I think, the market has also had a very strong run so far this year. So what we're seeing is the correction of that, profit taking setting in. I mean, the next catalyst and the next trigger we're looking at is that we're running into corporate action season, where we'll start to see maybe dividends being paid. We're expecting that this could potentially be the next trigger for the equity markets, where we might start seeing some investors start to maybe invest back into the market. This has been a trigger over the past couple of years, and we expect that this might likely be another trigger again for this year.
But it doesn't look like the result that has been released is having a lot of impact on investor sentiment.
A lot of it has been priced in, but what's usually is the trigger is the corporate action. So when a dividend is announced, that's usually what gets investors excited. So the results that we've seen so far is unaudited results, and with those we don't see any declarations of dividends yet. So investors usually get excited when you start to see dividends being paid. That's when I think we'll probably start to see some action.
All right, thank you so much, Mr. Benro, Afolabi Benro, equity trader with Stanbic IBTC stockbrokers.
Thank you.
All right, so still staying in Nigeria. Today, the Central Bank of Nigeria intervened in the market, and banks like Zenith Bank, Stanbic, Fidelity, Keystone, they sold as they bought from the CBN. These banks bought about $5 million to each of those banks mentioned, and the rate was between 1,490 and 1,499. That is the rate which these banks bought from CBN. So we expect that the FX space should be flooded, even if it's just for today and tomorrow, and we should see that reflect at the close of trade today in the value of the naira. Even though I do wonder that if the banks will buy, FX at this rate, 1,440 and 1,499 from the CBN, how much would they sell it for? So, of course, the price of the Naira is also affected by this. So even though there's liquidity in the market, but the price at which the banks acquire this liquidity is also important, but we'll see if Ladi has the answer to that very soon. Let's go to the Middle East, see how that's doing at intraday for the Middle East market. We can see that Abu Dhabi is in the green, 0.20%. At 9,343.02. Dubai is, however, very marginal. I guess we can look over this one. Perhaps at the close of trade, it would have recovered at 4,210.69. Saudi Arabia, on the other side, is positive, more than 0.5%, 0.56 at 12,365.29. Qatar, almost that, 0.49% at 10,093.19. We move to Asia now. Japan's Nikkei 225 reached the 38,000, and this is the first time in, I think, 34 years. That's what has happened in Asian market. It's a brief that they have a holiday there, so it's not a full market. But of course, the Nikkei 225 looking really good right there. 2.89% dropped a bit, but crossed 38,000 at some point and then came back. And it's the first time since the asset bust in 1990. Been a while, Kospi is also in the green, 1.12% at 2,649.64. Hang Seng Index is on the flip side, really low, right there, 0.83%. Other Asia Pacific, mostly more markets return to the trade after that holiday, including South Korea and Singapore. Shanghai is in the green, 1.28% at 2,865.90. And then Australia is in the red, 0.15%. That's what we have for the Asian market. From there, we go to the United States, looking at the features right there, a red board that we have for the features, 0.16% down. That's what Dow Jones has as investors prepared for key inflation. We expect the inflation number from the United States, and we know data drives the U.S. economy. So investors are always looking out for that. 38,822. The S&P 500 also in the red, 0.34%, 5,024. The Nasdaq, the tech guys, 0.58%. We do know that if inflation looks good, that means that if it's still high, then we know that the Fed might start cutting rates earlier. But if it drops, then that rate cut is not coming so soon. So, of course, investors will have to, if they don't cut the rates, borrowing is still expensive, investors run away from that. So that's why we see this anticipation, waiting by the investors. As we said, headline inflation is expected to have increased 0.2% month over month and 2.9% from a year earlier. That's according to economists' poll right there in the U.S. So, lad, it's a waiting game for the United States investors.
Yeah.
They're waiting to see those numbers. And it's not like Nigeria where, the data is one way, inflation is this way, and the market is one way.
Yeah.
Over there, things align. So if inflation is looking scary and the Fed does not cut rates, then
I hope we don't have to be worried, seeing that the futures market is already tending suddenly, in the red at this time.
Yeah.
Are they already seeing something?
Maybe they're hearing, some investors have their ears close to the ground. So.
Because if inflation comes in hotter than expected, that means rate cut bets are off for the longest time in the US.
I think they said they were going to start in March. Might just push it to...
They're already pushing it, way ahead, pushing the can.
Maybe. I'm sure there's news going on somewhere.
Yeah.
Anyway,
we'll get that. We'll get that later on, and we'll see how it impacts the market. Thank you so much.
Yeah, Lodi, I talked about the CBN intervention today in the market.
Exactly.
It will be interesting to see how much impact that will have. But even as I mentioned, the rate at which the banks acquire this FX from... Yeah,
CBN selling at about 1,490. Yeah.
1,490 to 1,499. So how much do you expect the commercial banks to now...
actually sell for? Because at the end of the day, I know the CBN is doing everything it can, to strengthen the naira. But I think at this point, they're just looking at liquidity, creating that liquidity for now. So let's hope that somehow
over time we will look at price.
Exactly, because I need the naira to strengthen. I cannot take another
Ladi, the CBN governor has told you and your government officials, reduce your demand for imported clothes, food, and everything.
I'm trying to cut my demand here. I'm cutting my demand. I hope I can cut more.
Okay, I wish you the best, Ladi. I wish you the best.
Yes, bye Nigeria at this point. Thank you so much, Eddie. Let's head on to Europe now. See, data shows German commercial property prices posted the biggest ever drop. And the concerns, the problems in the property sector could spill over to Germany's banking industry. Join us now for more is correspondent, DW correspondent Chiponda Chimbelu, join us from Berlin. Great to have you, Chip. So what's the latest?
Thanks for having me. Well, Ladi, there doesn't appear to be an end to the German property market crisis. During the last quarter of 2023, real estate prices fell by an average of 7.2% on the year. Now, that is according to German Banking Association, VDP. On Monday, it said it doesn't expect a turnaround anytime soon for the property sector. The high interest rate environment is one major reason. It has made borrowing more expensive and affected financing. The commercial property market is also declining due to the high numbers of people that we see working from home. And because of the price decline that we are seeing in the real estate market, Germany's housing crisis is expected to intensify. Now, that's because developers are struggling financially, and because housing cannot be built fast enough, rents are rising rapidly, especially in cities like Berlin, Munich, and Hamburg. So ordinary Germans are also feeling the effects of the property market crisis.
All right, Chip, but how's the banking industry affected?
Well, the crisis that we are seeing in the property sector is already affecting Germany's banking industry, Ladi. Last week, a bank here, the Deutsche Pfandbriefbank, released an unscheduled statement saying it had further increased its risk provisioning in the fourth quarter of last year due to persistent weakness of the real estate market. And that was obviously an attempt by the bank to reassure investors about its liquidity situation. Deutsche Pfandbriefbank is also exposed to the U.S. market. In fact, last November, it had to cut its profit forecast because of the American commercial property crisis. The trouble we are seeing here in Germany with the industry is also linked to the U.S., a market, of course, to which some banks are especially exposed. For instance, Germany's biggest bank, Deutsche Bank, has issued loans worth $17 billion in the U.S. commercial real estate market.
All right, so what can we expect from markets today?
European markets are expected to trade lower today. Investors are waiting for data on U.S. inflation for January. Now, that could provide a signal as to whether the U.S. Central Bank will hold or lower interest rates at its next meeting in March. In December, U.S. inflation rose to 3.4% from 3.1% in November. So the January rate may be critical to giving a clue about the direction the U.S. Fed will take. The U.S. Central Bank wants to bring inflation down to its target of 2%. And here in Germany, traders will be looking out for an investor sentiment survey for February. Now, that will be released by the Mannheim Center for European Economic Research.
All right, Chip, thank you so much for the details there. Investors looking out for a lot right there when it comes to data in most of these markets. All right, let's get a check on some stories now. See, Kenya's latest Eurobond issue has attracted orders in excess of about $5 billion as expectations of lower interest rates in the U.S. as a fuel demand for high-yielding securities. The East African nation will accept $1.5 billion of a 7-year debt at 10.375%. That's according to most sources that are familiar with this matter now. But definitely, we're seeing huge demand there, about $5 million. That's for this issue coming from Kenya. So we're seeing most African countries now looking to tap that Eurobond market. Hopefully, the Fed actually carry out this interest rate cuts going forward. To other markets now, we see gold prices were a little changed today as investors, they held back from making big bets ahead of that U.S. inflation data we're all expecting at this time, which will give fresh perspective on timing of the Federal Reserve's first rate cut. Spot gold, that was flat at $2,018 per ounce in early trade after briefly slipping to a more than 2-week low of $2,011.72 per ounce. That was yesterday. U.S. gold futures were almost unchanged at $2,032 per ounce. And still with the commodities market now, but away from metals, we see the global cocoa prices in 2024. They've surged by about 70% to $5,617 per ton from an average of about $3,309 $1,000 a ton in 2023. Prices in cocoa-producing countries are also up, hitting a 30-year high in Cameroon. Well, joining us now is Tomiwa Majewole, analyst at Financial Derivatives Company. Great to have you on the show.
Thank you. Good morning.
So, given that cocoa is, Nigeria's main agricultural export, I guess we can expect, more export revenues, and the cocoa farmers are going to earn more, seeing that cocoa prices are surging globally.
Yeah, ideally, an increase in cocoa prices globally should result in higher export earnings for Nigeria and also increased income for farmers. Especially, as you said, cocoa is Nigeria's fifth agricultural export commodity, although it just accounts for about 0.41% of total export earnings. But when you look at the reason why cocoa prices are actually increasing, you realize that it's as a result of low production and low supply. In Côte d'Ivoire, which is the top cocoa producer globally, total output fell about 36% in the 4 months ended January 2024. And also when you see Nigeria, just last week Sunday, there was a fire that destroyed about 30 hectares of cocoa plantation. That's going to lead to about a loss of about 10,000 tons of cocoa beans. So, when it's all said and done, there's low output, production is low, and this is going to diminish the expected export earnings. It's going to diminish the expected increase in farmers' income. And by the time you look at the fact that there's also a high case of smuggling of cocoa outside the borders of Nigeria, that's also going to undermine the expected earnings in export earnings. So yes, prices are high, but at the end of the day, it's still because of low output and low supply. So that's going to affect the expected increase in farmers' income.
Wow, I guess it's the same story, at the end of the day, what we're seeing in the oil market, looking at cocoa. But what factors are hindering Nigeria's cocoa sector, and what measures can be taken to, enhance production?
Yeah, so cocoa is the part of Nigeria's agricultural sector. So ultimately, the factors that are injuring Nigeria's agricultural sector are also the things that also hinder the production of cocoa in Nigeria. And two important ones is one, a low level of productivity, and two, a low level of human capital. And one of the things that the government can do is to encourage public-private partnership in the sector. This is a program, a model that has worked in Indonesia. Indonesia is the third global producer of cocoa, and is also the only non-West African producer, top 4 producer of cocoa. And what they did during 2018 was that they had a public-private partnership with Mars, which is a US chocolate manufacturing company. And what they did was they aimed to increase the productivity of cocoa farmers by focusing on improving the human supply. And of course, productivity levels increased. So that is one thing that they did in Indonesia, and that's another thing that can work in Nigeria. Once productivity level increases, income level is going to increase, and once the youth see that there's actually relative high level of income in cocoa sector, that's going to attract the youth to the sector, and that is going to help. And what the youth brings, they bring this youthful energy, they bring innovative mind, and it can help to transform the cocoa sector in the country.
All right, and definitely tomorrow is Valentine's Day, and we know demand for chocolates are high, during this period. But we're seeing prices already high for cocoa. So this will add to chocolate prices rising, I guess.
Yeah, for chocolate manufacturers, there's a high risk that they have a lesser earnings because their cost of production has risen, and what many of them are doing now, of course, is they're going to pass on this higher cost to consumers in form of higher prices. And we're seeing this happen already. Hershey, which is the largest US chocolate maker in the US, in Q4 23, their price product increased about 6.5%. So of course, chocolate prices are going to increase, but consumers of chocolate, they really love chocolates. A survey already shows that 92% of Americans intend to to give chocolates out this Valentine period. So demand is still high. Demand is still high, and demand is still going to be high, especially during these special periods like Valentine, Halloween. Americans love their chocolates. So, and of course, again, even if there's going to be a shift in consumption patterns, it's going to be to a lesser priced chocolates due to the availability of several options. And also, firms are also doing all they can to ensure that demand is strong. Some firms are offering discounts during this Valentine period so as to make sure that people are still able to afford chocolates.
Right, and Tomiwa, I'm wondering what's a good substitute for chocolate, at this time. Maybe I might just shift to biscuits, if, chocolate prices are too high. But we're also seeing that climate change, cocoa diseases are also a big issue at this point. And there's an expected chocolate deficit, But we're seeing some GMO, cocoa trees actually coming up. How will this impact the whole production process?
Yes, so GMO trees are plants whose genes have been altered or modified in the laboratory so as to make them have specific traits. And due to the increase in several supply constraints for cocoa, what people are trying to do now are trying to develop a cocoa GMO that will be able to be resistant to diseases, basically, and this can help to actually increase supply because there's huge demand for chocolates, but due to the several constraints affecting supply, there's a supply shortage there. So, but however, we're also seeing a concern because consumers are worried about artificially produced products. So, they are not sure about if consumers are really going to adopt these GMO cocoa products. But for cocoa producing countries like Nigeria, there's need for research so as to ensure that cocoa seeds don't go into extinction. There's a projection that by 2050, cocoa seeds might go into extinction. So there has to be more research and also more sustainable farming practices to ensure that does not happen, and also to build on cocoa beans, cocoa products, seeds that are actually disease resistant. There's more development for such thoughts.
All right, thank you so much. It was great having you, Tomiwa Majole, analyst at FDC, and definitely we hope the prices of chocolate don't go too high tomorrow. Thank you so much.
Thank you.
All right, now let's head on to other markets. Now we're seeing Bitcoin on a rampage, at this point, did touch $50,000 and kind of staying above it, at this time. 50,000, we see the market, it's green on the screen at this point, and not just regular green, it's deep green at this point. So just 3 pockets of red in the market, showing that this market is really, really, really bullish. Right now, we see the market cap also tending towards that 2 trillion level. Quite incredible. We've not seen this $50,000 a Bitcoin in about how many years now? And this is happening at once. Post ETF spot approval, Bitcoin spot approval there. We're seeing Ethereum deep green up 7.78% in 24 hours. Let's look at the stories now in the market. We're seeing Binance there. The CEO, Changpeng Zhao, his sentencing has been delayed until April. No, we know he did have that issue with the U.S., the SEC. They've been on Binance's case for the longest time now, and so they're delaying his sentencing. We know he's a citizen of the United Arab Emirates at this time, so they're still holding him up there. And definitely Bitcoin breaking $50,000 for the first time since 2021. That's a long time. Really bullish market. What was driving it at this point? Other stories now. We're seeing a billionaire, Pittil there. He's betting big on crypto, given a big forecast for the price of Bitcoin going forward. So we're seeing a lot of bullish news right here in the market. Let's bring in Olumide Adesina, our financial market analyst, to bring us up to speed. Hello, Olumide. Great to have you.
Yeah, good afternoon, Ladi. Thanks for having me.
Yeah, quite a bullish market we're seeing right now. $50,000 Bitcoin. Last time we saw this was in 2021. What is driving sentiment? Is this still the ETF?
Most definitely. There are a lot of scenarios around the crypto market right now, but just like you rightly alluded, Bitcoin is at its highest level since December 2021. And if you look at the cycle presently we are in, you recall that few weeks back, it moderated around the 38,800 support level. A lot of pundits were really wondering if Bitcoin could hold its waters. But, recent data from JP Morgan shows that demand for ETF, Bitcoin spot ETFs, is also rallying. In fact, at some point, it was one of the most demanded spot ETFs on the market. And interestingly, also, the narrative is that we're seeing the ecosystem moving more with Bitcoin miners. Recall that a few days ago, Chinese miners were looking to set shop in Ethiopia, probably because of the cheap source of energy in that place. And that also really reiterated the systemic role miners are playing in the market. Halving also is coming to play in few months' time. And, despite the fact that that event is really half a decade old, it lowers the rate at which Bitcoin is being created and increases the level of scarcity. So pundits are wondering that, yes, we have about close to a quarter of Bitcoin lost forever. We're seeing institutional investors holding their assets. A lot of Gen Z and millennials see it as digital gold. The bet is that Bitcoin definitely will hit the $1 trillion mark, because right as we speak, it's close to the $1 trillion mark. And just like you rightly alluded also, that the space of fear of not missing out has also increased retail participation as we speak.
Yeah, quite incredible. We see billionaire Peter Thiel there. His fund is putting up about $200 million. They've invested about $200 million so far in Bitcoin and Ethereum. That was late last year. Is this giving us indication of what institutional investors are doing at this time, or we're doing?
Yeah, I think just like you rightly said, we're seeing increased institutional participation. Templeton also, one of the oldest investment firms, also applied for a spot Ethereum ETF. That definitely has also increased dynamic activity at the most sought after blockchain in the space. So while we are seeing institutional investors, I think concerns are still with how global concerns are playing out. The Hamas-Israeli conflict has divergent really created a view on what is happening in the crypto market. But I still feel that is a strong factor to hold on. We still have high geopolitical concerns. Inflation data is coming out later this week. We don't know the body language of the US Fed, though it seems like interest rates cuts at the month of March is highly unlikely. But appetite for risk is really high, Ladi. And it's not just the crypto markets. We've seen NVIDIA, for example, facing stocks like companies like Alphabet and Amazon. So I think while appetite for risk is high, investors need to be very cautious, because with the way geopolitical uncertainty is really being amplified, the markets could really moderate at some point.
And it's quite interesting, knowing fully well that there's a cost of living crisis, right here, in the country. Definitely a risk-on sentiment would be the unusual path, at this time. But with what we're seeing right now, I guess everyone has to manage FOMO, at this point when it comes to Bitcoin.
Yeah, but, I'm also surprised that the amount of stablecoin being held is also at its all-time high. So pretty much, I can tell you that institutional investors are the one making the difference here, because stablecoin activity, look at USDT and USDC market valuation, they're almost at their all-time high.
Right.
So pretty much, I think my sentiment is that institutional investors are the one really driving the rally right now.
Right. Thank you so much, Olumide Additional, financial market analyst. Always great having your perspective.
Yeah, thank you for having me, Ladi.
All right, there you have it. So it's a very, very greedy market right here. That's for the crypto market. But the NGX intraday marginally down. We'll be looking forward to how that closes, and other global markets we track. Thank you for watching the show today. You can visit channelstv.com for more updates. I'm Ladi Williams from the team right here at Channels HQ in Lagos. It's bye for now.